Jordan, Leonardo Trading Options, how's it going? Hey, listen, I know you've been trying to schedule with me a couple of times, but look, I've just been flying all over the place. I've got some of your things that you're interested in here, how to find the right picks as far as the stock's concerned, how to get in and knowing when to get out and stuff like that. Is that pretty much your main area that you're focusing and learning more today?
I just need some, I feel like I need like some kind of guidance, because like, even though like, you win some, then you lose some, but then I end up like losing more than I win, so it's like I'm back at square one, so.
Okay, I got you. Okay, well, Jordan, no problem. We're definitely going to get you on the right track. So my goal in the next 20, 30 minutes to make sure that I will give you some really good information that you can utilize starting tomorrow, okay?
Okay.
So it probably would be a good idea if you grab a pen and paper as we go through this, okay?
Okay.
Now, feel free to ask me any questions as we go through this, okay? I only have one question for you, and that is, can you give me one example of a stock that you've recently traded, regardless of whether you won money or you lost money, it doesn't matter. I just want to know what ticker you traded and why did you actually take the trade.
Like I drew a fib. I've been watching Shop for a little while, so like I drew a fib on Shop, and I've been like kind of like watching it.
Okay.
And trying to see if there's any patterns in the Shop, and I was really hell bent that like Shop would just like fall.
So you ended up buying some puts. So the stock we're talking about, just to make sure, is Shopify, which is Shop, ticker SHOP, and you were buying some puts on Shopify in the hopes that it was going to drop like a rock. And what happened?
It went against me.
It went against you. Okay. All right. So let's take a look together through this trade and identify how you could have actually avoided such a situation. Okay, so can you jump on stockcharts.com with me, and we're actually going to walk through this trade and identify when you were trying to enter the trade and when you were trying to get out of the trade, so we can make sure that this wouldn't happen again. Okay?
Okay.
All right, so if you go to stockcharts.com and you would type in SHOP once you see the free field there, and you should see a chart that looks like it's all over the place. So it's kind of hard to figure out what exactly is supposed to happen, But we're going to make some sense out of this, okay?
You got it. Turning off the kitchen light.
Well, it sounds like you're at home.
Yeah, I'm at home right now.
What was that, Alexa? Was that Amazon Alexa talking to you?
No, it's Google.
Google was talking to you. Okay.
Yeah, Google.
Okay, good deal. Now, while you're looking that up, is there any other trades that you've taken recently besides Shopify?
I got put there's a strangle that I put on Apple it was a couple weeks ago.
Okay, how did that work out?
Right. It wasn't bad.
You made some money?
I made a little bit of. I mean, it was like as soon as I saw profit, I was like, all right, I'm just gonna walk out of this, and like I ended up like taking like about like I want to say like $80.
$80. Well, hold on. Let me ask you this: what if you didn't get out? How much more would you have made?
Oh, that wasn't recent. I mean, that wasn't like I saw like what you were saying, like they're buying the dips, they're buying pretty much all the like break for earnings that they're gonna end up buying everything. I was like, oh, come on. But before then, I think I put a strangle and Shop like Apple. I want to say like it was like a couple weeks ago. It had that.
So you were still doing that while it was dropping, basically. It was a few weeks ago. Okay, good. So I'm glad you did that. So there's some things that you clearly you're doing right.
Okay.
So you've made some money. I mean, clearly probably not as much as you would like to. I mean, $80 is kind of.
I don't know, but like it's like I feel like I've been doing like penny stocks. I've used like apps like Robinhood like just to learn, and then after that I was like, let me just try penny stocks, and then I got into options, and I was like reading some books on options and learning like different strategies and stuff. But I'm not like a professional. options trader. So like,
Well, that's fine.
when I saw your YouTube page, I was like, man, this guy knows options. Like, you know, and like especially trading like big companies. Like I thought, like once I learned about options, I was just like surprised that you can even trade big company stocks without having that much capital. So that's what really intrigued me.
Right.
So.
Okay. All right. Well, that's some good information because I'm going to give you specifically some guidelines as far as which stocks would be beneficial for you to trade. But let me know when you're at stock chart so we can take a look at quick chart at this chart real quick. Okay.
Yeah, I'm there right now.
Okay.
I was just trying to open my TV just to let you know, like, when did I like hop in on that trade.
Okay. Cool.
That Jersey.
All right, so let's take a look at this chart. Are you looking at Shopify? What I want to make sure is that you're on the daily time frame. Daily.
Yeah.
Okay. All right. So if you just look at the chart, tell me your observation. There is about recently it's had made a death cross. Do you see where the blue line crossed the orange line? Do you see that?
Yeah, the 50 and the 20.
Right. So that happened at a very important level of about 146. Can you see that?
46.
Right.
Yeah.
Okay, good. So do you see it broke above that, it hit another top, and then it broke below that and, you know, made another bottom at about 120s. Do you see that it has a very strong support level around these 120 level? Okay, good. And so then it's got a resistance level right at about the time where it's trading now. Do you see around 170? You see the first stop was made on September 17th. The second top was made right around September 26th. Another top on December 13th, roughly. Okay, and now it's at the same level. Okay, so one of your questions was, okay, well, how do I identify the good entries and exits? So ideally, you want to buy calls at the support level, and you want to buy puts at the resistance level. Okay, but how do you know if this is the resistance right now? Because it looks like clearly the stock is breaking up higher, right?
Yeah.
So how would you actually know if indeed it's going to move higher from here or if it's going to drop? So can you share some of your thoughts with me on that?
I know that, like, from like my point of view, like from just previous charts, like I've seen like shop go up, so several times, and I've watched it, and I've like hopped in and like bought it at the bottom and like sold it at the top.
Okay.
So like I know that it's not gonna hold that long. So maybe it is that I'm gambling, like, to be honest with you. But
okay, so let's do this. Let's just focus and just be very specific here. Okay, let's focus and be very specific. So you were probably buying. Let's take a quick look, and then we'll come back to the subject I was trying to raise. But when you look at this chart, you were probably trying to buy puts when about 160, 155 level.
Yeah.
Okay, now let's make an important observation about this, which if you were taking our charts course, this would have been like a no-brainer. This would have been so simple for you. I mean, you would be like, oh my God, how did I miss this? Okay, so look at the formation of these red candles. Do you see that red candle where it's got the tail sticking at the bottom, where it's basically touching that 155 level? Can you see that?
Yes.
Okay, do you see just a couple of candles prior to that, there's another red candle and a black candle, and they have the same formation where the tail is sticking lower? Okay, those are what we call bullish reversal candles. Okay, and so bullish reversal candles, they're very important to take notice of, because if you get multiple of those in a row, okay, this stock that tells you that every time it drops, institutions are coming in to buy the stock. So what you really want to do is you want to do exactly what institutions are doing. Okay, so if you would have just observed, let's say, one of those candles, then it doesn't matter. It's not a big deal. But now you're seeing one after another one, so it is something to be paying attention to. Okay, and so after you see this three bullish reversal candle, you see what happens next, right? The stock actually breaks above, right? So now, but that was just one sign. What is another sign that you see is developing right now? And I'll give you a little hint. What's going on between the blue line and the orange line? What's happening right now?
It's about to cross.
Okay, which would be a what kind of cross? Would that be a bearish crossover or a bullish crossover?
Yeah, blue coming in on top.
Okay, so just for the purpose of this call, let's make it simple. Okay, so when you see the blue line crossing the orange on the way lower, that's bearish. Okay, when you see it crossing on the way higher, that's bullish. So when the blue line crosses the orange line on the way higher, just like right here, that's a bullish crossover. Typically after that, what happens is the stock actually going to go higher. And that's pretty much an indication that Shopify could actually go slightly higher. So this may not be actually the time to short it. Okay, which goes nicely because we just discovered what? We just talked about, number one, what? The bullish reversal candles. Now we're talking about what type of crossover? A bullish crossover as well. Now let's take your eyes just a little bit below that and let's take a look at the MACD. Do you see the MACD right here where the black line is above the orange line? Are you looking at MACD right now? You should be just under the chart of Shopify. You should see MACD.
Okay, I'm sorry. I didn't scroll down. Okay, I see.
Okay,
Yes.
so
that's like the
right.
where it's overbought and oversold.
Well, no, that's the RSI.
RSI.
The RSI is at 68 right now, which is fine. It's not oversold. It's not overbought. It's kind of neutral, but it is at the highest level, which from here, but still from here, it's still got room to run. Okay, so very important. Okay, but on the MACD, you also get a bullish reading, and if you have accumulation distribution pulled up, as I do in most of my videos, right, you would also see that as well. So you got about how many bullish things we just discovered?
Talked about
so we've got the bullish reversal candles, we got the bullish crossover, we've got the bullish MACD, we've got the bullish accumulation distribution, and we got bullish RSI. This is exactly the point where you're buying puts. Okay, but now you know. So you could have clearly avoided this, right, if you knew specifically what to look at on this chart. Okay, so now the question is, okay, all right, so you've made a bearish bet, just because you missed some observations here. Now let's take a look at maybe where the stock could be heading and what should you be doing now. Okay, now consider this. The stock in December 24th, when the stocks were hitting lows, it was at $124 a share, right? Yeah, now it's at 170.
170.
That's a huge percentage increase over just a very short amount of time. I mean, that's like 30-40% increase.
I see.
So would you be necessarily a bull? I know all the indication of bullish, and you could have probably easily taken a trade from 155 to 170 range, but do you want to continuously be a bull at this point? In other words, would you want to buy calls here? Would you want to buy, let's say, 180 calls, or would you want to buy them in the money, 170 calls from here on?
It doesn't seem. I don't think it would be reasonable.
Right. So
I don't know if I've seen it hit those levels before, but I'm not too sure.
Right, but overall the stock is incredibly bullish. So I would suggest this, right? Because right now it's just slightly above the resistance level, and you want to make sure that it does break. My strategy here would be, look, if it breaks to like 175, I would buy the calls. Okay, but if it slows down and you see maybe accumulation starts dropping, you see the RSI starting to drop, and you see that blue line is not really crossing the orange line, then you want to buy puts, because chances are the probability is going to be against the fact that it's going to go higher, because it just rocketed 30-40%. Does that make sense? Okay, cool. So basically my suggestion is to wait to see if it indeed is going to hit 175, because if it does, guess what's going to happen?
It's going to keep going.
It could go to 200, right? We're talking about a huge move, because this is a big range, right? It's trading in September. I mean, let's just do this. Let's go to the weekly chart. Let's switch to weekly. Shopify, if you just change the time frame from daily to weekly. Okay, what do you have here? Does this look overall bullish or bearish to you?
Bullish.
Bullish, okay. And do you see how this level between 120 and 170 that's been there, a solid base foundation now for quite some time, hasn't it? It's been developing over the last year. Okay, so what does that mean if it finally breaks above 175? What does that really tell you?
It still has room to go.
Like, you could easily, because it's been in that range, it's not like it's been in that range for like a couple of weeks, right?
Like you're saying, like it's in the channel, pretty much.
Right, it's been in the channel. It's been in the channel for a year, right? But now it's breaking above the resistance level. So if it does break above, because it's not a channel that's been in for like a week or two, if it does break above that, you actually have a very substantial probability it could hit $200. Does that make sense? Yeah, so when stocks actually break out of the channel, right, they could go substantially higher. We're not talking about like $10 higher, $5 higher. I mean, this thing could really shoot up to $200, maybe $210, right?
Yeah.
But now you got to be careful. You don't just want to pull the trigger, because there are some bearish things as far as when we're looking at the weekly chart right now. There are definitely some bearish things on here. Definitely some bearish stuff. Okay, for example, the RSI is bearish, because if you look on this chart, do you see the RSI back in 2017 around August, February, March, actually April and May? Do you see the RSI was closer to 90? But the stock price was $90 at the time. Now the stock is 170 and the RSI is at 60. That's not a super good combination. Do you see what I'm saying? So we're clearly seeing some bearish things developing here. So my strategy would be wait till 175. If it does get there on high volume, buy calls. If it gets there on low volume, then buy puts. Make sense? Okay, cool. All right, let's get, so far, okay, we've talked about how to identify overall direction, whether something is more overall bullish or bearish. In other words, what we're talking about here is probabilities, right? Is the probability likely that it's going to break above the resistance level and move higher? Or is the probability that it's going to drop and not go over that resistance level? Which probability is higher here? And so ideally when you take the trade, you want to go where the probability is higher. So in this case, considering the weekly chart, you probably got a probability of about 60% that is going to break higher, and you got a probability of about 40% that is going to drop lower. Now, it doesn't mean it's going to drop tomorrow. It doesn't mean that it's going to drop over the next 48 hours. But if we were to measure the temperature, let's say over the course of the next 7 days to 14 days, then the probability is going to go higher, is a little bit higher than the probability that it will drop. Cool?
I hear you.
Okay, gotcha. All right, so let's address some of the other questions. Look, penny stocks are great. There's nothing wrong with that. Ideally, especially if you're trying to build like a smaller size account, if you're not working with 100 grand yet, then you want to focus on options on high price stock. So, have you seen me trade some of my live trading videos online? Have you seen that?
Yeah, you make it look really easy.
Well, it is easy, like if you do your calculations, right? The calculations sometimes are not easy, right? And you're not going to get 100% of your trades right. But if you look at them from the standpoint of probabilities, then you will have a much greater chance to do so. So this stock right here is actually good for trading options because it meets the criteria. And I want you to write down the criteria, okay? I don't want you to trade any stocks under $100, okay? So if you want to write that down, no stocks under 100. I want you ideally to focus on trading stocks above $100, $200. All right. And then if you're working with a smaller size account, like maybe a couple of $1,000, if you're on the 10 grand, then ideally what I want you to do is focus on trading Thursday and Friday only. That's it. No Mondays, no Tuesdays, no Wednesdays, just Thursday and Friday only. Can you do that?
Yes, sir.
Okay. All right. And then the question is, now you've got the right product you're going to trade. Now you know which days to focus on. And the only last thing, the ingredient that's missing here is how do you really know specifically whether you should trade Thursday or Friday, right? So ideally you want to take the course that we have, the 13 Markets Move Formula, which is going to help you identify that. It's pretty much going to be impossible to talk about all the scenarios of the 13 Markets Move over the phone. But the course is 5 hours, and certainly if you have the opportunity to do so, I'd strongly encourage you because it's bringing a lot of light, specifically when to trade and when not to trade. Okay. But in the meantime, I feel like I've given you a little bit of information, right? If you focus on the right type of stock, if you look for more things on the chart, I mean, ideally, you probably want to start with the chart course and just making sure you understand the divergences, that you understand how things work together, because essentially that's going to help you be more consistent and get more trades correctly. But look, at this point, we're kind of looking at your trade, so ask me any questions you have at this time.
So with your courses, so I was just looking at like the prices and everything, but around how much are these?
I strongly encourage to first focus on building the foundation, really just understanding not the charts, okay, but the divergences on the charts, because that's what's going to help you identify some really good solid trades, okay? And once you understand that, then you would actually qualify to take the alerts, because you can't just simply sign up for the alerts, right? So we've studied it. We have a higher probability of somebody that's enrolling in alerts of doing substantially better if they understand the charts, the divergences, and this, all the details, because it has a lot to do with when you're getting in, getting out, and so on. So very important to really dive in and understand how the charts works, right? Because clearly, look, what's $1,500? It's nothing, compared to, developing a method and the process that can help you identify these trades consistently, right? Because that was a losing trade. I mean, how much could you have avoided on that trade, right? I mean, if you didn't take it, what was your loss? A couple of $100, probably?
Yeah.
I mean, if it's a couple of $100 loss, right? I mean, 6 trades and you've paid for the course, right? 6 trades that you could have avoided taking just from understanding how the charts work. I mean, an average trader takes 6 trades in one day. I mean, let's say you don't take that many. Let's say you take 1 or 2 trades a day. I mean, the course will pay for itself within 3 or 4 days. Does that make sense? I hope I've brought some light as far as the trade that you've taken and some of the things that you could have done and observed to simply avoid it or be on the right side. Okay, so do you feel like you've learned something throughout this phone call?
I feel like, there's much, what I've really learned is that there's some things I need to work on. And I guess you're right about I gotta really know what to look for, and maybe taking a course or something would kind of help.
Okay, look, for just reaching out, and I feel bad I missed my last 2 appointments with you. Here's what I'll do. I'm actually going to have Monica, my assistant. She will send you a complimentary course. It's going to be like 1 hour long, and it's actually going to focus some really cool stuff, which is going to show you specifically how to exit the trades. I have many traders reach out to me, and oftentimes they're like, well, look, how, Leonardo, how do I find the good trade here and the good trade here? And the reality of things is, I'm like, okay, you focus so much on identifying these trades. What do you do once you actually get a good trade? And what I've discovered is very few people take any time to learn how to exit the trades. So once you understand that, it's actually going to help you keep more money in your account. So keep an eye on your email. Monica is going to send you a couple of links. One of them is going to be to the complimentary course. Typically it's $300-400. We're just going to give it to you. Okay, so we're going to get that done. And second thing, she'll send you some links. If you do have a chance to invest in one of our courses, look, one thing I guarantee it's going to do for you is going to save you a lot of time, and it's going to save you a lot of money, which time and money is probably the 2 most precious commodities we have, right? So if I can help you do both, I'll be happy, and I'll look forward to hearing your success story one day, okay? So I appreciate you reaching out, okay? Best of luck trading in 2019, and if I can be a part of your success, I would be super happy about that, okay?
Okay.
All right, Jordan, take care. Have a great weekend.
And thank you for your time, too.
Okay, you're welcome. Bye-bye.